minute. That account payable, account payable concept is there, right?
Mhm.
Can you just in 1 or 2 minutes,
Mhm.
can you just brief me that the account payable concept, like we create vendor groups and the number ranges, and after that
Sure.
we generally, that payments, right, vendor payments will be done by the company, that will be taken to the liability side of the balance sheet, right? Like that, just that concept only for the brief concept.
Sure. Sure.
Yeah, why it is required? Not a detail, only for 1 or 2 minutes.
Okay. So first of all, account payable means credit purchase, right? That is clear, right? So if you want to do the
Yeah,
credit
that is
purchase,
clear, sir. Clear. Yeah.
you need to have the vendor. So to create the vendor, first create the vendor group.
Yes, sir. Yeah.
Vendor
We
group.
need to have a different vendors.
Yes. Then
All
number ranges, the vendor group and vendor number ranges. Then link this vendor group.
to the
Num
reconciliation account also. Right?
Yeah, this
Uh,
vendor, no, I mean this vendor and vendor group and number ranges you have to link. Okay, so this is the
yeah.
three step. First, this was only required in ECC. In HANA, addition to this, you have to do the BP also. So BP grouping,
Yes, sir. Yeah.
second BP number ranges, and BP grouping and number ranges linking. BP grouping and number ranges linking. So this is additional configuration you have to do in HANA. Then another step that something called this BP group, sorry, vendor group and BP group you have to link. Okay,
Yes, sir.
linking the BP group and vendor group. Okay, so this is about the master data process. Okay, once this is
Okay.
done, then you can create terms of payment also. This is also required, terms of payment. Okay, fine. Because in
Yes, sir.
terms of payment you will define the credit period, discount and all those things. Once this is done, the next step you can create the BP master or vendor master. Let's say BP master you can create it. Okay, so once you have the BP master, or let's say before creating the BP master you have to create a reconciliation GL. Okay,
Okay.
enter
Okay. Reconciliation GL is nothing but one of the GL account type. Am I correct, sir?
exactly. Yes,
Okay.
recon GL, because whenever you post anything in BP, it will get to hit to the reconciliation GL in the backend. Okay, fine.
Okay.
Because in this
Got it, sir.
vendor BP master, this reconciliation GL is entering. Then next is a purchase posting, B60 and all you are doing. Then you do the payment. Then you do the
Okay.
payment. So then you do the payment. Then you also learn. Sometime you make the advance payment also. Okay,
Okay.
advance
Yeah.
payment also you learn. Okay, so these are the thing you have learned. Then you also learn how to create the house bank and all those process. Okay, banking process.
Okay. House bank, the latest what we are being taught, that house bank is also a part of the accounts payable.
Exactly, yeah.
Okay, sir.
Because
Thank you, sir. Yeah.
if you don't have bank, then how will make the payment, right? So if you want to receive the
Got it,
payment,
sir. Yeah.
so so these are the thing at least we have covered. Okay, fine. Na?
Yeah, got it, sir. Yeah, so sir, after the once the payment is being made to the vendor,
Hmm.
then how how our payments, company payments are being tracked in the via GL accounts to the main that profit and loss accounts or balance sheet. How it will be tracked?
So first of all, once you make the payment, if you are making the payment from check, then you have to print the check and send to the vendor. The vendor will take that check. If you are making electronic, then the electronic file you have to send to the bank. Okay, so
Okay.
bank will make the, then you'll get the statement, bank statement you'll get. Okay, next day. So in the bank statement you'll get to know which are actually payment happened, which are got rejected. Okay, accordingly you'll track the payment. Okay, na?
Yes, sir. Yeah.
So these are
Yeah,
the
in the
pros.
bank, through bank statement, yeah, we can track. Okay, okay,
So that is known
automatically
as,
through,
yeah,
okay,
that is
automatically
no.
through reconciliation. Sorry, sir. Yeah,
Yes, 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 yes. That is
automatically.
what I
Yeah.
was going to tell. Yeah, that is what I was going to
Uh-huh.
tell. So you'll do the
Okay.
reconciliation. So in reconciliation, you'll get to know either payment happened or not
Okay. In SAP, yeah,
in
through
SAP.
reconciliation account, we will come to know, and
Yeah.
automatically that reconciliation, yeah, through reconciliation account,
Hmm.
the posting from sub ledger to main ledger
Ledger.
and reflecting in the balance sheet will happen automatically. In that
Exactly.
reports, yeah, that FI consultant we can see in the reports
Exactly.
whether it
Exactly.
has been
So
correctly tracked
ideally,
in the liability side of the balance sheet or not.
yes, yes, exactly. That actually your clearing GL should be ideally zero. So all those open items should be moved to the main bank account. Okay, by reconciliation. So reconciliation process you'll be learning soon after this process is over. Okay, after 1 week.
Okay,
Maybe. So this is the
okay,
whole
got it.
process. Okay, na?
Okay, yeah.
Okay.
Thank you.
Today
Sir,
we are going to learn about the. Anybody
sir,
has anything want to ask? Yeah. Yes,
yes.
Silas.
Sir, how we can do the vendor to vendor hop?
Sorry, vendor,
Vendor to vendor hop.
vendor to vendor.
Knock off, knock off.
We'll see. We'll see. I'll teach you. I'll teach you. Okay. You can also try Neb.42, but I'll teach you. You don't worry. Yeah.
F-42. Okay.
Yeah. Okay. Now let us go for foreign currency revaluation. Okay. This is one of the important topic in AP and AR both the area. Foreign currency revaluation is very important topic. Okay. Everyone should know. So anybody has any question? Anybody wants to ask? Otherwise, please, if you have any question, you can ask. Otherwise, you can be in mute. Hmm? So, uh, before understanding the foreign currency, if you remember, I have taught you about something called currency type. I taught you document currency, company code currency. You remember or forget? You remember document currency is also known as a transaction currency. Then I taught you local currency or company code currency. Okay, so foreign currency revaluation will come into picture when you do the transaction other than company code currency. Okay, other than company code currency, if you are doing transaction in any other currency, then that transaction is known as a foreign currency transactions. Okay, let's say you have US 10 company code. US 10 company code currency USD. Other than USD, if you are doing any transaction, okay, then that transaction is known as a foreign currency transactions. Okay, again I'm repeating, other than company code currency, if you are doing in any other currency the transaction, that transaction is known as a foreign currency transactions. Okay, okay, or in this way you can understand, if your document currency or your transaction currency is other than company code currency, then that transaction is known as a foreign currency transaction. Okay, so foreign currency transaction is equal to other than company code currency transaction. Here is it clear? Everybody is clear how to identify foreign currency transaction? Everybody
Yes.
is clear, right? Let's say if my company code is IN10, see one point I have clearly told you in the beginning only. Just by my company is in India doesn't mean that my company code currency will also be INR. Just by my company code is located in USA, my company code currency may not be USD. Okay, I have told you many a time. There are many countries where they do not follow their country currency as a company code currency. Okay, sometimes they'll follow other currency also. So that is the reason when you're talking in the interview also, please talk proper way. You tell company code currency, not in country and all. Okay, don't tell that. If my company code is located in Ghana, I may not use Ghana country currency as a company code currency. I may use USD also. Okay, so you have to tell other than company code currency. So if my company code is IN10 and if company code currency is given INR, other than INR, if I'm doing transaction in any other currency, then that particular transaction is known as a foreign currency transaction. So this foreign currency transaction, you have to do the revaluation. Okay, you have to do the revaluation. Okay, now now generally you may do foreign currency transactions in multiple currencies. Okay, you have to do in multiple currencies. Now question arises here, let's say here, let's say you do the purchase, let's say you purchase something in foreign currency, but then journal entry will be there, purchase account debit to vendor account. Okay, now one is, this is the PNL line item, this is the balance sheet line item. Will you agree? This is the PNL line item, this is the balance sheet line item, right? Correct, na? Hello?
Yes.
Purchase account is a expense account, right? Vendor
Yes.
is a balance sheet item, right? Now in most of the company, they will do only revaluation for the balance sheet line item. Okay, they do not do revaluation for the PNL line item. SAP doesn't stop you from not revaluating the PNL line item. You can do the revaluation of PNL line item, but 99% you'll find companies are doing the revaluation for the balance sheet line items only. Okay, but again, SAP is not stopping you that you should not revaluate the PNL line item. If you have, see, everything is this revaluation, everything is guided by the certain accounting principles. So if that accounting principle says for that particular country that PNL line item should also be revaluated, then you can consider even PNL line item GLs also in the revaluation process. Otherwise, mostly it will be the balance sheet line item. Okay, so foreign currency revaluation is applicable or both. I'll write both. Okay, balance sheet and PNL line item. So if even if you go for interview, if you tell both, they may not agree with you, because it doesn't mean the interviewer has also 100% knowledge. Okay, but both is possible. You tell him in that way that 99% people will go for balance sheet, but SAP also gives you provision to do the PNL line items revaluation also. Okay, now when 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 you say that I have to do the revaluation for the balanced line items, then SAP again helps you to bifurcate the revaluation based on two nature of the GL. One GL, let's see, let me write foreign currency revaluation with open item managed GL and non-open item managed GL. Okay. Open item management means what? What is called open item management GL? I have already taught you many times. What is called open item management? How can, yeah.
Is clear in the future time of the
vendor or customer balances.
Okay, so how can you identify which are the GL open item managed GL?
In the red status.
Where?
Red in the red status in the line item report.
But how can you identify that this GL is a open item managed GL? Let's say I'm going in FS00.
Which is not clear, debit and credit.
So open item management indicator has to be enabled.
That is what the good study and bad study. Focus, learning. How can you tell that this GL is a open item management, this GL is not open item management? So here one indicator is there. Here. So whichever GL, see here, whichever GL is tick this as a open item management. If it is tick, it is a open item. Which is not ticked, it is a non-open item. So generally, see here, cash and bank. See, this is open item management. Other GL, this is not open item. See, their option itself is not there. See, this is not open. So this is the first point you have to check, because whichever GLs are ticked with open item management, those should be handled in different way. Whichever GLs are not ticked as open item management, that should be ticked with different way. Now for customer and vendor, the moment you tick this one for customer and vendor, this reconciliation GL, then open item management is not required. Okay, by default they are considered as a open item managed GL, reconciliation GL. Okay, so the moment you tick these two, it is not required. So here open item managed GL are now AP, okay, APGL, ARGL, APGL, ARGL, any advance payment you have made to the vendor. You remember one day you have created one advance payment GL you have created. So advance payment GL, advance receipt GL, advance receipt GL. Okay, so these are the GL. You generally don't tick this open item management. Okay, you don't tick, but you tick this reconciliation GL. Therefore they are known as a open item GL. There will be open item line item. Okay, now some GL which you have to tick, let's say bank incoming outgoing, bank incoming GL, bank outgoing GL. Okay, now these are the GL. For this GL you never select this one as a reconciliation GL. So to make them open item, you are selecting this one. Okay, you are selecting this one. So any GL either selected with this one or any GL with selected D and K, customer and vendor, will be considered as a open item managed GL here. Okay, open item managed GL here. So this GL revaluation will be in different way, and other GL other than this GL which are not selected as a open item managed GL, other than this any other GL which are not selected as a open item management GL, those GL revaluation will be in other way. Okay, so let's say none open item managed GL, let's say share capital, bank loan, any other GL. So whichever you have not selected. So all this GL revaluation will be in separate process. Okay. Is it clear? Open item and non-open item managed GL. So open item managed GLs, one which you have created a reconciliation GL. Okay, there also you can see the line item wise. You people have rightly said part of the answer was correct, that those are required clearing. That's absolutely correct. So any APAR reconciliation GL, okay, those are also have the line items and you do the clearing, okay, in the vendor line item. So this GL, for this GL, you no need to tick this one, open item management. This is not required for vendor reconciliation or customer reconciliation GL. This one, open item not required. The moment you select this one, it will not allow to select this one, okay. It will not allow to select this one. So this is the one that this is also known as a open item. Other way is if any GL selected with this one, if directly selected this one, that is also known as a open item. Is that clear, everyone? Clear? Clear or not? Hello?
Yes.
Yes, sir.
Okay, na? So these are the GL, like bank incoming, bank outgoing, GRIR. So you'll understand GRIR, GL. So these are the some GL where you directly go and make them as an open item management. So if GL is as an open item management, then configuration process is different. If GL is non-open item management, then configuration process is little different. Up to here it is clear, right? Clear, na? No doubt, na? Hello? Hello?
No.
Okay. Now if you are clear up to here, then tell me PNLGL is considered as an open item or non-open item? PNLGL. PNLGL is an open item management or non-open item management GL?
Only balance sheet GL are open.
Then what is the PNL line items? PNLGL, that is what I'm telling. PNLGL is open item or non-open item then?
Non-open item.
Non-open
Exactly. Because it will not allow you to for PNLGL. So even PNLGL also, the way you are going to map for non-open item balance sheet GL. So similar way you have to handle for the your PNLGL also. Okay. In case if it is required for your country, for your business, that PNLGL should also be reevaluated. Okay. Now foreign currency revaluation, there are two stages are there. Okay, two stages are there. One is known as a one step is known as a revaluation. One is known as a actual payment or receipt. So let me put in this way. Let's say, listen very carefully. Let's say this is the date. Okay, this is the date you do some purchase. Purchase you did. Okay, purchase from the foreign. Let's say we are talking about US 10 company code, which is located in USA. So if you are buying the from foreign vendor, then it should be other than USA. So let's say you purchase something from Great Britain. Okay, your vendor is located in Great Britain. Okay, or UK. It is located in UK, and your company is located in USA. Okay, so you purchase worth of rupees 1000 GBP something. This is what you purchase, and this is UK, and your company code is located in USA. Okay, now on this date when you purchase, the rate between GBP and USD was, let's say, 1 GBP is equal to 1.5 USD. Okay, this is the exchange rate. So 1000 GBP is equal to, it will become 1500 USD. Will you agree with this? Will you agree? Hello?
Yes.
Yes.
Okay, no? Now let's say when you purchase, your vendor has given you credit period. Credit period your vendor given. Let's say he given you 90 days, okay? 90 days he given you, saying, meaning that you can make the payment after 90 days, okay? So 90 days means up to 1st January when you purchase, February, January 1 month, February 2 month, March, maybe March end you have to make the payment, or maybe April 2nd, by April 2nd will be your payment, 30 days if you'll add. Okay, so let's say 4th April, let's say this is your due date. Okay, on an average I calculated 90 days, I added in this one. So this is your due date, and this date you have to make the payment. Okay, now before making the actual payment, a receipt also, it can be receipt scenario also, not all the time purchase only payment, it may be receipt scenario also. So before actually making the payment on this date, during the month end you have to do the revaluation, you have to do this transaction revaluation. Let's say month end came, month end means 31st January 2023 came here. Okay, now definitely on 31st January, there may be the different exchange rate. Maybe, may not be. Okay, maybe, may not be. It's not that it will be, it may be 1.5 also on this date also. If it is 1.5, same exchange rate between GBP and USD, same exchange rate, then there is no loss on gain. Okay, no loss, no loss here. Before actual payment, if between the month end, if you are doing the revaluation, whatever loss or gain you will get, that is known as a unrealized. Okay, unrealized word, unrealized word you have to use, no unrealized loss or gain. Okay, because exchange rate is same, there is no fluctuation on this date. Now let's say exchange rate become 2 here, exchange rate not exactly, but it is 2. Now try to understand, and you only tell either it is gain or loss. When you purchase on 1st of January, you purchase for 1000 GBP and exchange rate was this much. So you purchase worth of rupees 1500 USD, right? If you had to pay on this date, you had to pay only 1500 USD. Is that correct? Is that correct? Hello? Everyone is clear? Is that correct, right? When you purchase for 100 GBP, exchange rate was this much. So this is the USD. You had purchased worth of rupee this much. If you had to make the cash payment, you had to pay only 1500. Correct, na? Correct, right? Now it became 2 USD. Let's say today, if you have to make the payment, if you have to make the payment today on 31st January, same vendor is bothering about, he wants his 1000 GBP only, but to pay 1000 GBP you have to pay 2000 USD to get the 1000 USD 1000 GBP, correct? Because exchange rate is 2 USD, 1 GBP is equal to 2 USD. So to buy 1000 GBP, how much USD you have to pay? 2000 USD. Am I right? Understanding is clear? Hello?
Yes.
Now here 500 extra USD you have to pay, right? On this date you have to pay how much? 500 extra USD. Correct, na? Hello?
Yes, sir.
So
Yes.
here you are getting loss. Here you are getting loss. So it is known as a unrealized loss. Okay. Unrealized loss you are getting. Let's say on 31st January it became 1 USD. 1 GBP is equal to 1 1 GBP is equal to 1 USD it became. So same vendor is bothering about his 1000 GBP. He doesn't want more or less. Okay. So now buy this 1000 GBP, you have to pay 1000 USD. So if you have to make today payment, you have to make only 1000 USD. So here 1500 and 1000, you are in gain of 500 rupees USD. So this is known as a real unrealized gain. Calculation is clear. First of all, calculation is clear. Calculation is clear or not? All three scenarios clear. How to identify, no unrealized gain or loss, then how to identify unrealized loss, how to identify unrealized gain. Is it clear?
Yes, sir.
Clear.
Clear, na? Okay, so during month end, one scenario will come here. For example, purpose I have given 3 scenario. Let's say this is the scenario came. This is the scenario. Let's say you have. Okay, let's say this is the scenario is there. During month end, 2 USD. One GBP is equal to 1 GBP is equal to 2 USD. This is the scenario. Now you have unrealized loss. So what happened here? What is the journal entry it will post? Okay, what is the journal entry it will post? So journal entry, this unrealized loss, here let me put journal entry, unrealized loss account debit to, there is one balances adjustment, GL you have to create, balances adjustment account credit. So this is the journal entry it will post in loss scenario, unrealized loss scenario. Okay. In unrealized gain scenario, unrealized, if you are in gain scenario, then unrealized gain GL will be in credit to unrealized gain, and this balances adjustment will be in debit. Okay, so this is the journal entry it will post during the month end revaluation. Okay, during the month end revaluation, this is the journal entry it will post. If it is loss, then it will post unrealized loss account debit to balance sheet adjustment account. If you are in gain, then balance sheet adjustment account will be in debit and unrealized gain will be in credit. Okay, unrealized gain account. How to create, where to map, that is next thing. So you have to learn this here. So here 500 you are in gain, so 500. Okay, it will post. Here if loss, here also 500 it will post. Now is it clear up to here? Is it clear, everyone? Hello, is it clear, everyone?
Yes, sir. Yes, sir.
Okay, now
Yes, sir.
so what is the nature of this one? That
Sir,
at the month end,
sir, meaning of balance sheet adjustment account and why this comes into picture here.
so here you know that to post any journal entry you need to account, right? So it is a SAP thing. You have to put here one GL opposite of this one. Okay, yeah,
Okay, sir.
there is no other meaning, so that is the reason they have given, and this is the name they have given, balance sheet adjustment. If you want to write FX provision something, if you want to write, in some company I have seen it is balance sheet adjustment only, but description they'll write like FX provision account something they'll write. So you can write whatever you want to write, but it is the offset line item we have to map. Okay, now next, yeah, so next day immediately, next day, okay, next day I'm not taking next month, I'm telling next day. Because why I'm telling this one, because 99% people will take next month. If you are running the revaluation on 30 only, let's say you're running revaluation on 30 only, 30/01/2023, so next day is a 31st, right? Next day is a 31st, right? Hello, correct na? Next day is a 31st, correct?
Yes, yes.
Okay, why I'm telling you, because next day it will do the reversal of this entry. So you should be very, very careful when you are running. So generally posting should be at last of the day. Posting should be at last of the day, so that next day should fall into next month only. Next day should fall into next month. Okay, so it is February 2023. Next day what it will do, what it will do, this journal entry, whatever journal entry you have post in the last month, last date, next day, it will do the reversal posting of this entry. Okay, it will reverse it. It will reverse means if you have posted this journal entry, then if unrealized loss was in debit, then unrealized loss will become credit. Unrealized loss to unrealized loss to unrealized loss account credit, same amount, and balance sheet adjustment will be debit. So opposite journal entry it will post. Okay, but this both the journal entry, it will happen at a single time. When you're running on this date, this journal entry will get posted in the January month, and this journal entry also will get posted in the February month. So both the journal entry will get posted in a single run only. So make sure that you are running in proper day. Okay, proper revaluation date you are selecting. Otherwise it will same month it will post also, in reverse also. So both the journal entry will posted in same month. So that is wrong thing. So you have to make sure that you are giving proper date. So next day is falling in the next month, so that accrual entry, it is we are running this because this is known as also accrual entry get posted, or revaluation entry get posted in the current month, and reversal entry get posted in the next month. Okay, but both the entry will get posted during the run. So make sure that even next month period is also open. Let's say you are in 31st January 2023 you are running. So you have to make sure that your February period is also open, because reversal entry is going to post in the February month. So February period should also be open when you're running the revaluation. So revaluation entry will get posted in the January month, and reversal entry will get posted in the February month. Okay, so this is done. Now still your actual payment date is here. Now let's say now February month came, February month end came, 28 2023 came here. This is the date came. Now again there will be some exchange rate. Okay, on this date also there will be some exchange rate. Let's say 1 GBP is equal to 1 USD. Okay, this is the 8 on this date. This is the exchange rate. Okay, now to pay the 1000 GBP, you have to pay 1000 USD to get the 1000 GBP. Now check here, it was 1500. Now you are making payment only 1000. So you are in gain now, unrealized gain. How much? 500 USD. Now this journal entry, when on 28th you are running the again revaluation, what journal entry it will post now? Now it will post balance is adjustment, account debit 500 to unrealized gain, account credit 500. This is the journal entry will post in the February month, but next day is March month, right? Next day means March 03/2023. Upon the reversal entry it will get posted. Okay, so this is the posting and this is the reversal. Reversal entry opposite, unrealized gain, account debit to balance sheet adjustment. This is the revaluation entry it will post. Okay, 1st March. Then again March month end came. March month end 31/03/2023. Again some exchange rate will be there. Okay, let's say equality is there, 1.5 only. So 1 GBP is equal to, if 1.5 USD only, then there is no gain or loss. So nothing booking will come. No booking will come. Okay, there won't be any journal entry. Okay, but let's say something, let's say make here 1 GBP is equal to 3 USD. This is the scenario. Then to pay 1000 GBP, you have to pay 3000 USD. So you are in 1500 loss now. Unrealized loss. Unrealized loss. Okay. Now again, same loss journal entry will get posted. Let me. Okay. Unrealized loss entry will get posted 1500, and this is during the 31st of March, and this is next day 1st April 2000. Now here actual days come where you have to make the payment. Okay, where you have to make the payment. So here, so far here, see all the GL will have the zero balance because you are booking, you are reversing, you are booking, you are reversing. So there won't be any balance, okay, on the unrealized gain or loss GL because you are booking and reversing, you are booking and reversing. Now actual day came on 4th. So now tell me what will be the exchange rate on 4th when you are making the payment. So let's say 1 GBP and GBP is equal to whatever scenario it is there. Let's say 3 USD. This is the exchange rate on this date when you are making the payment. Okay, this is the. Now you are making the payment, actual payment you are making on this day. Payment entry, payment entry, payment entry. So what will happen? Vendor account debit. Vendor account debit. Vendor is only bothering about his 1000 rupee GBP. Okay. So to buy the 1000 rupees GBP, it will be here. Whatever is there now, same entry you have to put here. Here, this 1500 USD. Put here. The original vendor amount only put here. Okay, USD. Now to bank. To bank account. To outgoing bank. Outgoing bank. Now to buy the 1000 rupees USD at this date, current exchange rate is 1 GBP is equal to 3 USD. So you have to pay 3000 USD to the bank. From your bank, actually 3000 rupees is going. Now you are in 1500 loss. Okay, you are in 1500 loss. So during the payment time or payment receipt time also, okay, not just payment, whatever gain or loss you are getting, that is known as a realized gain or loss. Okay, so what got changed here? Realized loss. You are getting here realized loss. GL account debit. How much? 1500 rupees USD. So this is the journal entry get posted when actually you make the payment. Okay, and this will never get reversed. This is the fixed entry. Okay, this will hit your PNL GL, PNL statement, and it is not going to be reversed. So this is known as a realized loss. Realized means actual loss you are booking here. Okay, actual loss you are booking here. If you are in gain scenario, then realized gain will come in the grid. Let's say another scenario, same scenario I'm putting. Let's say 1 GBP is equal to 1 USD become an okay. Now how much you have to pay to the bank to buy the 1000 GBP, because you have to make the payment 1000 rupees GBP. So you have to buy 1000 GBP. To buy 1000 GBP, you have to pay 1000 USD only because 1:1 is there. Okay, so you are in gain now. 500 you are getting gain here to realize gain here. Count. How much? 500 USD. This is the thing. Is it clear, everyone? So this is known as a realized gain or loss. So this realized gain or loss, it will automatically pick during the payment time. Okay. But revaluation, it is a month end activity. There is T code. You have to run every month to do the revaluation. Revaluation will have the reversal entry, but realized gain or loss, that is actually you are getting during the payment or receipt time, that is not going to be reversed. Is that clear, everyone? Hello, is it clear?
Yes.
Reply yes or no. Is
Yes.
it clear?
Clear.
Yes.
Yeah.
Okay, so here total see how many GL you have to create. We start from here. So first one GL you have to create unrealized loss and unrealized gain, 2 GL. Balance sheet adjustment, 3 GL you want, and 2 GL you want from here. Realized loss and realized gain. So total GL, there are 5 GL required. There are 5 GLs. One unrealized gain, second GL unrealized loss. All these are P&L GL, and then balance is adjustment. This you can create a balance sheet also, not a problem. Then realized loss, fifth realized gain. 5 GL you have to create. All these are P&L GL, except this you can create as a balance sheet GL also fine. Okay, all other are P&L GL. Now create under operating or non-operating. Again, it depends company to company. Some company consider as a operating gain or loss. Some will consider non-operating. Okay, so it's up to business how they want to create it, and they want to consider this gain or loss as a operating gain or loss or non-operating. It is up to business. Both the scenario I have seen. Okay, but it should be the PNL, and this you can create as a balance. This also I have seen some will create PNL only, but you can create it as a balance sheet. Okay, fine. Any doubt in this foreign currency revaluation concept wise? Anybody has any doubt? Foreign currency revaluation concept wise problem? Anybody has any doubt? You understood what is called realized, unrealized, what is called month end revaluation, what is called actual? Everybody got it? Hello?
Yes, sir.
Yes, sir. Yeah. Yes, sir. Yeah. We will go through again, and yeah, if any doubts are there, we will ask in the next session.
Okay, fine. Okay, so let us quickly create the GL. Okay, I'll create when you people anyway know that how to create GL. Okay, so now next in this one only, let us understand. There is something called simulation ledger, and concept called simulation ledger that we have not created. I told you during the foreign currency revaluation time I teach you. Now simulation ledger means, let's say simulation ledger is applicable only foreign currency revaluation time. Okay, not this actual payment time. First that you understand. Here for actual payment time simulation ledger will not come, only for foreign currency revaluation. Let's say when 31st March came or last month and any date came, you are doing the revaluation. When you are doing the revaluation, this is the journal entry getting posted, and it is posting to your standard ledger, maybe leading ledger, non-leading ledger. It is getting posted. Okay, which are your legal books of account. Let's say before this date itself, okay, before this date itself, you want to do the revaluation and you want to save the result in some ledger for time being, for your analysis purpose. Okay, there is nothing to do with the a journal entry. It will not hit to your actual books of account. So but you want to see that result, you want to save somewhere, so that if management wants you, the management wants to analyze what actually we are going to get, either we are going to get loss or gain during the month end, Before month end itself, if you want to see what may be my foreign currency position, loss or gain position, then you can done the revaluation and you can save that result in the simulation ledger. Okay, so simulation ledger uses before the actual foreign currency run, you can run any number of time the foreign currency revaluation and you can save in this simulation ledger, and that result you can management can use for their analysis purpose, any decision making purpose they can use it. But this run, whatever posting you are going to make in the simulation ledger, that will not impact to your leading and non-leading ledger books of account. This is the dummy posting you can see. Okay, this is the dummy posting. So for that purpose in S4HANA, SAP has given the simulation ledger concept. Okay, so let me write here. Simulation ledger, SML. Simulation ledger is used to store the foreign currency revaluation result before the actual run. Simulation ledger will not generate any accounting entries. Okay, any accounting entries, but system generates S series technical document. When you run the foreign currency revaluation for simulation ledger, system will generate yes followed by 0001. So yes series document will get generated. So if you see in AC DOCA any document with yes series, then you can get to know, okay, this is simulation ledger related document. Okay, so this is what when you run the actual run, when you run we run in S4HANA FAGL underscore FCB. So there is little change between ECC and S4HANA. I'm going to talk about that from T code point of view. When you run actual run, then simulation ledger data will be deleted. So what happened when you run the actual run, right? Whatever you have already run and stored in simulation ledger, those detail will get deleted automatically. So if you run the actual run also known as update run, so from this simulation ledger, whatever it is there, it will get deleted. So this is one new concept in HANA came, simulation ledger concept. And another difference is that in ECC, earlier it was F.05, I think they were using in classical GL. Okay, this was the T code. Then when new GL came, then underscore val, this T code came to run the foreign currency revaluation. Now in HANA, only this T code is required. This is the T code. Okay. So this is also one difference between ECC and S4HANA. So in S4HANA, to do the foreign currency revaluation, this is the T code. In ECC, this was the T code. In old ECC, this was the T code. Okay.
Hello.
So this is also one difference. Yeah.
Sir, as the last line you written, when you are in actual and updating that FAGL, it automatically deleted the line, or we manually delete?
No, it will get deleted automatically.
Based on what, sir? Means based on the month end or at the date of entry, it will be deleted automatically.
No. So far, whatever you have stored, it will get deleted everything the moment you run the actual run.
Okay, sir.
Okay, na? So let's say your month end, let's say 2 days 21, right? So let's say you're planning to run on 30 November. 30 November you're planning to run the actual run. Before that, whatever you have run right in simulation ledger, that you can run any number of time. So when you run on 38th November actual run, all those previous simulation ledger, whatever you have saved, all those will get deleted from the simulation ledger. Huh? Okay, na? Okay, na? Na Kalyan?
Yes, sir. Yes, sir.
So that will get deleted. So that is the thing. Okay, so if you are okay with this concept, then tomorrow I'll create one simulation ledger. If I have not created, so let me create at least one simulation ledger quickly. FAGL underscore FCB. Okay, first we'll do actual wala run, then simulation ledger I'll take in the second part. Okay, so I'll not mix both, other will get confused. In fact, I have not started this one, but no problem. This I'll take little later. First, let me finish this part. What I taught here now, all this process let me teach you. So I'll create the GL, and tomorrow we'll start the configuration. There are 4 or 5 steps are there, so that you have to do. Okay. So all the configurations are in one place only. Let's say configuration. It is not simulation, simulation ledger, normal configuration step I'm talking. Some is first is known as a create valuation method. In this method, you have to tell what document type you are going to use, what exchange rate type you are going to use. Either you want to post when you have only gain or you have loss, what scenario you are going to post. You want to revalue line item wise or balance wise. So few config are there that we are going to decide in this first step. Second step, valuation area. Create valuation area. This valuation area nothing to do with the site plant. Okay, this is the valuation area. And then third step, link valuation area with accounting principle. Okay, then fourth step, map the GL. The GL, what you are telling, realize on real, all the GL you have to map in the T code OBA1. Okay, so these 4 or 5 steps are there that you have to config and we have to create the GL. Okay, guys, if you don't have any question, anybody has any question in this? Otherwise, we'll finish tomorrow. Is it okay, or any doubt is there in this? You got in now the concept, realize, unrealize, everything is clear, right? Hello, clear now? They will ask in the interview. They will ask in the interview what is called realize, what is called unrealized, and or when they are telling, explain me the foreign currency revaluation. You have to talk about all this process. Okay. Okay then.
Sir,
Hmm.
Sir, that
Yes, sir.
vendor to vendor knockoff F-42, can you let me know the Fiori application? Because in SAP Fiori reference library, I have searched but I could not found that name. Do you have any idea?
No, I don't have idea. If you have not searched, see, somebody has sent you one link. Have you practiced that one? See, I have also sent the link. Yesterday, somebody sent again that link. You download, please, all that. So there will be 10,000 Fiori apps are there. You download all those Fiori app, and right side you'll find the T code also. Have you done that one?
No, sir, but yesterday evening I have searched by that website,
No,
but
no,
I
no.
could
What
not
I'm
found.
telling, you have to go and download all the Fiori app. Okay. See, some Fiori app I have noted down. It's not list of the Fiori app what you people are asking, but there if you download, na, you'll get all the Fiori app. Then why you're not following?
Sure, sir, I will follow today.
Yeah. Let me search. You're telling you don't have. Let me search. Have you done the Google and all?
Yes, sir.
You have not found?
No, sir.
Let me search if I'm able to find. In cloud version, everything should be available in the Fiori app, man. Why you are telling you are not able to?
Sir, I am able to found F-51, but 42 I am not able to found.
Okay. Let me see whether it is correct T code or wrong T code. Think this is the T code to the vendor knockup, vendor clearing. No, re. What is the T code? 1 minute. F.43 then 43. F.44 then T code is F.44. Okay, to vendor clearing. Yeah, F.44 T code. Let me.
F-44. Okay, sir.
Yeah, F.44. Let me search. Can you search please now?
Yes, sir.
F.44. There it is. F.44. Let me check. Yeah, it is here, I think. Check. Not this one. Not this one. Check if it is the one. If
Yes,
not,
sir.
then we'll
Sure, I will.
find out. Okay.
Yes, sir.
Yeah, please check. F.44 is a correct T code. Okay, for vendor clearing.
Sure, sir. Sure, sir. Thank you, sir. I will check it.
Okay, no? Yeah. Thank you, everyone. Thank you so much. Yeah. Bye bye. Yeah. Thank you.
Thank you.